What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. Happy Tuesday out there. Usually I do a Monday live stream, but due to some scheduling conflicts, we are going to go over the fundamentals report today. The Bitcoin Fundamentals Report is my free weekly newsletter that goes out every Monday. You can subscribe over there on bitcoinandmarkets.com. And let's just jump right over there right now. Hope you guys are all doing well on this Tuesday. Bitcoinmarkets.com, where you find all of my content. You can see the fundamentals report. I put out a macro minutes, Bitcoin minutes, just real short, one topic posts. Put my podcast out on here too. Try to get as many of those of these live streams put out on the podcast as I can. And I also have premium content that comes out here. I'm going to get one on Tuesday or Wednesday this week. I don't want to rush those because those are premium content. I want to make them as high value as possible. So I'll get those out as soon as possible. I am live streaming on Telegram, Twitter, YouTube, and Rumble. If you're watching on Twitter, jump over to the YouTube and Rumble. You can find those links in my pinned tweet and like, comment, subscribe over there. I will be checking the comments, which let's go into that right here. John Delaney is here. What's up? Glad to see you. Hope you're having a good start to your week. Okay, so bitcoinandmarkets.com. Let's jump right into the fundamentals report. Now, the price section, I do have a price section. I cover all the major sectors of Bitcoin, including price and trading and stuff. And so that section is going to be about 20 hours old, but we will look at a live chart today as well. All right. You can jump to the sections that interest you the most here. We are celebrating 300 reports. This is report number 302. I don't know exactly how long I'll be doing this for, but you get one free month if you sign up to become a $5 member. You get to join the price forecast competition. You can see here you also get a clickable version of the prehistory graphic and a downloadable PDF of the Bitcoin dictionary, which I put out back in 2020. So check that out for $5 a month. And also you get a first free month of the premium content as well. Check it out. I'm sure you'll like it. My predictions have been spot on for both Bitcoin and macro going back, 5 years. Okay, snapshot of Bitcoin. We are trying to confirm higher. That's the weekly trend. We've had a little bit of a dip this morning. We will look at the chart here in a second. Media sentiment is positive. It's positive. There's not been any huge developments that I can remember off the top of my head right now, but we're not being attacked. Okay, we're not being attacked. I mean, I guess the Telegram CEO is a big Bitcoiner. What's his name? Durov. But he's not being arrested strictly for Bitcoin or anything like that. He's being arrested for moderation, not moderating Telegram, which is a good thing. Or it's a good thing it's not moderated. It's a bad thing he's being arrested. Network traffic is very low. We'll take a look at the mempool and all that. Mining industry is bottoming right now. They are actually probably recovering. I could have put this into recovering because the hash rate is exploding higher. Today, we were supposed to get a difficulty adjustment. Let's see if difficulty has adjusted. You guys can check out this website here. 1 day, 3 hours still away from the difficulty adjustment. It looks like it'll be about 2%. The last one was negative 4%. But bottoming or recovering for the mining industry. Okay, price section. At the time of writing yesterday, 63,645. That was $4,500 up issue to issue, or almost 8%. Market cap was 1.225 trillion. Satoshis per dollar, 1573, and one finny, that's 1/10,000th of a Bitcoin, is $6.36. Previous difficulty adjustment should be in red, but it's in green. Negative 4.2%. Next estimated adjustment yesterday was 3%, but you just saw there it's down to 2% in 1 day, not days. Mempool, 137 megabytes. We'll take a look at the live one, actually, because that was yesterday. Fees for the next block were 89 cents or 10 sats per virtual byte. The fee spike is completely gone. Low priority fee was 62 cents. Capacity for Lightning Network was kind of surprising this week. So BTC capacity increased 1.1% or 53 Bitcoins, back over 5,000, which It has been struggling to maintain around $5,000 or 5,000 Bitcoins in liquidity. Channels under 50,000, but up slightly on the week, 350 channels, 0.7%. So that is the Lightning Network and your snapshot of Bitcoin. Let's jump down into the headlines. Bitcoin fee spike now back to normal. I wrote about this in the free Bitcoin Minute last week. You guys can check that out at the link. There was a massive spike in Bitcoin mempool all of a sudden, with fees reaching as high as $500 for a couple blocks. I use mempool and fee spikes as a leading indicator for volatility. You guys probably heard me talk about this a lot in the past. Mempool and fee spikes are a leading indicator for volatility. However, as a leading indicator, it tends to build up into a volatile event. This move was out of the blue with no buildup. You can see on mempool.space, you can hide different fee blocks. And so I just hid the fee blocks that made sense to get this nice flat fee structure in mempool. And you can see the spike just happened all of a sudden. So there was no buildup, which to me, says if we were going to have volatility, it would be building up for more than one day. I mean, it would be building up for a week, constantly higher, and then maybe have a spike at the top. But this just spiked out of the blue to extremely high levels that I don't remember the last time we saw $500 fees in a block. So pretty significant. It was due to layer 2 proof of stake scheme called Babylon that allows the pegging of Bitcoin into a contract that can then be used and reused into multiple staking schemes in a group of altcoins. After the initial rush, the mempool and fees quickly returned to normal. And you can see here, this is more what I would expect for volatility. Even this is kind of rapid, but more of a gradual buildup, where this was just like cacao right there, and it launched. And it had a big fee spike, but now you can see they are pretty much back to normal. So that is the debrief of what happened with Babylon and fees. Okay, let's go on to the Thai bot. So the Thai bot has a CBDC experiment, and they have an expiration date on this new Thai bot. So the Thai government is issuing a digital currency with a 6-month expiration date. The essence of the experiment is the Thais will be given 10,000 baht or $280. Recipients of digital money must be over 16 years old and have a digital wallet app on the phone, yada, yada, yada. Here, let's go down here. The money can be spent within 6 months within a radius of 4 kilometers from their place of residence. What does this mean? Digital money will be tied to biometrics for access to a digital wallet. Electronic currency will have an expiration date. We already have electronic currency. You will be able to spend your money only when the state approves it. Okay. I would add something even more to this. What does this mean? Okay. It likely means a spike in inflation followed by a spike in deflation. But here's what I say. My initial reaction was that this is going to be a disaster and cause massive inflation, but it depends how the bot are printed. If they are borrowed or taken one for one from somewhere else, it won't be all that inflationary. So if they sell government bonds, use those government bond proceeds, turn them into CBDC tokens, extinguish the legacy type of Thai bot in the banking system, and put it into the CBDC, excuse me, then it won't be all that inflationary. In fact, if they are destroyed in 6 months, it could be deflationary. So if they take it from the banking system, put it into the CBDC, it won't be that inflationary. But if they have an expiration date of 6 months, maybe it will turn into being a deflationary shock, because those coins will then be unspendable or disappear. Now, is this overall or just one holder? So one holder can hold for 6 months. And if they hold longer than 6 months, it is unspendable? Or is it that it doesn't matter like how many times you spend it, the absolute total lifespan of the token is 6 months? That would be a big deal, because if you get it at 5 months and 20 days, it's going to be less valuable actually than the one that has a 6 month timeline on it. So some of the details are unclear. But overall, we don't know if it's going to be inflationary if it is like funded by actual bot in the banking system. However, I don't think that's the case. If they simply print these CBDC tokens out of thin air, there is going to be a big inflationary impact, followed 6 months later by a deflationary impulse if the tokens are destroyed again. So this is what I would add up here to what does this mean? It's going to be inflationary because they're printing it out of thin air. It's a brand new form of money. It's not bank money, which other currencies are. The government currencies are bank money, actually. These are fiat. These are strictly fiat. So CBDCs are fiat, which, I draw this distinction between fiat and credit money or bank money. And what we have today is not fiat money, it's credit. And so this is pure fiat. And that would be very, very inflationary. So we'll have to watch what goes on here with the Thai bot. Overall, I say this is likely a globalist influenced experiment. They like to run these experiments in these governments that maybe they still look up to the West, like Sri Lanka. They'll look up to the Western leaders in like the WEF and all these globalist types. Oh yeah, we'll try this program. You can do your experiment on us. You're so successful in big Western economies, you wouldn't do anything really bad to us. So we're going to run this experiment, and then they totally destroy their country. So this is likely a globalist influenced experiment on one of these marginal countries, this one being Thailand. Okay, let's continue to the next headline. BlackRock Bitcoin ETF has third highest year-to-date inflow. So out of all ETFs, you can see IBIT is number 3. And QQQ, it's bigger than QQQ or TLT. And here is Fidelity down here. So Fidelity is having a good show as well at number 14. But this one at number 3 is a very good sign for Bitcoin. So they have more than QQQ or TLT. Imagine when it hits new all-time highs, the flows are going to be crazy. And I mean, there's a lot of space here between second and third. But IBIT, has been adding, I don't know what their average is. Let me take a peek at that. If I can here. Find where it is. BTC, ETFs. Let's share this tab. So Farsight Investors, you guys can check this out. IBIT has the first column right here. Their average is $133 million in inflows per day. That's gigantic. That is gigantic. So it continues to move up this chart. Again, this is a big step from 3 to 2. Won't pass it this year, but maybe next year we'll see how much can flow into IBIT in 2025. Okay. Next headline. Bitcoin ETF inflows begin streak. Big number on Friday. And there was a big number yesterday too. So anyway, I just put this chart together. This is one that I'm just following. And you can see we're hitting a new all-time high for total inflows, 17.8 billion. And that was even higher after yesterday. Let's see what the total is. It's over 18 billion now. So inflows continue to come in. And look at where price is. So price, yes, it is correlated. Okay, price is correlated with this, with the price movements, but the relative price relative to supply or inflows is not keeping up. And so I think there is going to be an elastic reaction to this, and the price is going to rapidly catch up. Okay, it's going to, I don't think that there's not going to be outflows to catch down to price. I think the price is going to catch up to inflows, and that can happen very, very rapidly in Bitcoin. All right, next headline. Founder of Telegram has been arrested in France. French police are investigating Telegram founder Pavel Durov for Telegram's unmoderated content, and it's linked to, quote, a wide range of crimes, end quote. Moscow quickly responded saying Durov should be afforded all his rights, all his rights. And Elon tweeted about freedom of speech being under attack in Europe. Macron has responded as well, stating the arrest was not politically motivated. And I saw, again, another development here is that he's being mocked for this. Macron is being openly mocked that this is not politically motivated. Of course, it's politically motivated. They're trying to censor political speech. And of course, to censor political speech, they always use the boogeyman of criminals, criminal activity, a wide range of crimes. Well, this is so, like, what does that even mean? That's so broad, anything can fit under that. Okay, some people are pointing out that the woman he was traveling with was posting on Instagram, which could have been an OPSEC leak that helped the French police know his movements and pending arrival in France. So make sure you guys have that OPSEC locked down. Especially if you're a Bitcoiner, you need to have this OPSEC locked down. His app is great, but he has launched a shitcoin. It is down 16% on the news of his arrest, not as much as one might think for such big news. So here is the Ton chart. Down 16% on the news, but it could have fallen more over the last 24 hours since the time of writing. So don't need to check that though. Overall, I hope for a quick resolution to this event and upholding a dedication to freedom of speech everywhere. Next section is the macro headlines, but let me check the chat, see if there's anything new. John Delaney, no. Okay, going into Telegram to check if there's any comments there. Again, guys, I am following the thread for the live stream itself, not just the plain BTCM members channel. So you have to click into the live stream thread, and I'll see it there. Okay, let's continue then on to the next section, macro headlines. Non-farm payrolls revised down 818,000 jobs. In a huge data revision, non-farm payrolls were cut by 818,000 jobs in one swoop. We've been waiting for a revision like this due to the massive gap between the two government-provided employment surveys. This is the establishment survey, also called the payroll survey, which has diverged massively from the household survey, both released by the BLS. And you can see here, graphic, non-farm payrolls, 818,000 jobs revised. The BLS has an FAQ about why these are two surveys. Here is what they say. Okay, so let's bring this up. So the BLS has two monthly surveys that measure employment levels and trends. The current population survey, also known as the household survey, and the current employment statistics survey, also known as the payroll or establishment survey. Both surveys are needed for a complete picture of the labor market. So the payroll survey, that's the one we're talking about that was revised here, is designed to measure employment, hours, and earnings in the non-farm sector with industry and geographic detail. The survey is best known for providing a highly reliable gauge of monthly change in non-farm payroll employment. A representative sample of business in the U.S. provides the data for the payroll survey. Okay, what about the household survey? It is designed to measure the labor force status of the civilian non-institutional population with demographic detail. So this is based off population or households or people, like individuals. This is jobs. This is people. Those are the two. So having two jobs will cause this gap in these two surveys. The national unemployment rate is the best known statistic produced from the household survey. So there you go. The national unemployment rate is produced from the household survey, not the payroll survey. And this is the one we're talking about being revised. So unemployment rate will not change due to this. The survey also provides a measure of employed people, one that includes agricultural workers and self-employed. A representative sample of U.S. households provides the information for the household survey. Okay, so that's the difference. You guys can check it out. I've linked to it. Yeah, I linked to it down here where it says BLS. You guys can find that. Importantly, the gap between surveys had grown to a whopping 4.1 million. And this differs. Okay, I found like three different numbers. I've seen it as high as like 7 million. I've seen it as low as like 1.8 million, but this was kind of a middle of the road. And I found a chart here that could demonstrate this. So I used the gap that was present in the chart, and that's 4.1 million. This 818,000 downward revision doesn't even cover a quarter of the spread. There are likely more revisions coming. Also, the unemployment rate of 4.3% will be unaffected by this revision because it's figured from the household survey, not the establishment. And you can see here on this chart, we have the household survey in dark blue, and you can see how it has been really bad all year. 2022 into middle of 2023, it looked all right. End of 2023, and it's been down this year. So if you look at the people side of things, and the people side of the equation is the important side of the equation. And so if you look at the people side of the equation, you see that employment is horrible. But if you look at the payroll side, which is 2 jobs, 3 jobs, working extra hours, whatever the case is, that had continued to rise, and there was this very steep gap here. Now, if you revise this down 818, it's like only down to here. Less than a quarter of this gap has been filled by this revision. All right, so that's it from the jobs report. How about the FOMC minutes and Jackson Hole? The minutes released for last month's FOMC meeting showed that several members were entertaining a July cut, but ultimately voted against it. This would match my suspicion that the chance of a July chance of a cut. I even put this through Grok and said, find my grammatical errors, my misspellings and stuff, and it didn't catch all these things. So that the chance of a cut last meeting was higher than the market was pricing in at the time. If you remember, it was pricing in like a 99% chance of no cut, where this is, several members were entertaining it, and so the chance was not 100% for no cut. It was actually more like, I would say, 90%, but whatever. Overall, the minutes were quite dovish and paved the way for Fed Chair Powell's speech at Jackson Hole. We covered them in a live stream on Friday, and you guys can check that out if you haven't yet. My main takeaways from the Powell speech. Here we go. Number 1, he was much more low-key than normal at the FOMC press conferences. If you remember during the live stream, I said, he looked very calm. He was, I don't know, his demeanor was different, and he was extremely blunt, almost like he was more open. He had his guard down, if you will, but he was much more low-key. This demeanor was quiet and reserved. He had several blunt statements leading up to the big one. And here are these several blunt statements. The balance of risks to our 2 mandates has changed, meaning they are done fighting inflation and pivoting to fighting unemployment, but said very bluntly and matter of fact. Okay, the second one here is the cooling in the labor market conditions is unmistakable. Very blunt, meaning there is no ambiguity here that the labor market is deteriorating. It is cooling, which is not a good sign. Okay, there is one direction that this goes. Even with Fed action, there is still one direction. So that is unmistakable at this point. Next quote here from Powell. It seems unlikely that the labor market will be a source of elevated inflationary pressure anytime soon, meaning there was room to fight unemployment. So, they think about the wage price spiral, and when you have higher prices, people need to get paid more. And so if they get paid more, then they can reinforce the higher prices, and then they need to get paid more. And if they do get paid more, they reinforce higher prices. So there's a wage price spiral. However, that didn't happen this time because there was no real fundamental growth to match the higher prices. And so there was hitting a brick wall, and the economy had started to slow down, starting way back in July of 2023. So let's see, the elevated inflationary pressure. So will not be, that's very confident. He does say unlikely, but will not be a source of elevated pressures anytime soon. So they can go back to accommodative monetary policy in their mind. They go back to accommodative monetary policy, and they are not in any trouble of sparking a wage price spiral. So that's what that sentence means. Okay, and then this is the big one. Quote, the time has come for policy to adjust, meaning they're going to cut at the September meeting. So we know they're going to cut at the September meeting. It's just a matter of how big they're going to cut. And things can change rapidly just in a matter of a couple days. But right now it looks like 25 basis points. Could it be 50? Yes. Could it be 75? Yes. I'm hoping that, if you go back to 2019, Powell cut early. And right now it doesn't feel like an early cut. It feels like he might be behind, more behind than he was in 2019, but maybe he's not. Maybe the recession that I have been expecting to really hit in Q3 or at the end of Q3, so maybe even starting Q4, maybe the economy is strong enough that they can push off a technical recession until 2025 or something like that. And Powell is cutting early once again. Because remember, in 2019, he cut in July. He cut 3 times. Then they had the repo rumble in September 16th of 2019, when repo rates spiked. On-the-run treasuries went bidless. And it was another event like the Great Financial Crisis, where there was a brief period of a couple hours that the entire financial system was frozen. And I would say September of 2019, that was more like a few minutes, maybe even 30 minutes that it was frozen. And the Great Financial Crisis, it was more like 3-4 hours or something. And that they were terrified that this was never going to unfreeze and the entire system was going to collapse. Because remember, it's built on credit. And you can't have creative destruction in a credit-based system, because everything is credit and everything will go to zero. Everything. The amount of money in the system goes to zero, people. You have to have something else like Bitcoin or silver coins or gold coins to basically try to barter, because the entire financial system, there's no money. And so anyway, that's kind of what happened in September. And Powell saw that coming, and he cut prior. He cut 3 times prior. So is he cutting early by having a September cut this time? Is he cutting early? I mean, it just so happens that this September rate cut is coming right up in this very highly volatile window of the end of Q3, which I think is very, very interesting. And it opens up a lot of possibilities. And so we will have to be watching that very closely. But it's coming up very, very shortly, just about 3 weeks away. Okay, next topic. Actually, let me check comments because it's been a few minutes. Just in case, guys, if you're watching on Twitter, you can put your comments. You can also put your comments by jumping over to YouTube or Rumble. Those links are in my pinned tweet. Let me check Telegram if there's anything here in Telegram. Nothing there. Okay. So, guys, I am live streaming on YouTube, Rumble, Twitter, and Telegram. Telegram is the community. Check that out. All the links are either in my pinned tweet or down below in the description. So I appreciate that. And we're going off of the free weekly newsletter called the Bitcoin Fundamentals Report, issue 302. Comes out every Monday, free to everybody. It summarizes all the important aspects of Bitcoin and macro that affect Bitcoin. And so that's where we're going through right now. We are on the macro headlines. We're going to be going into price and then into mining and into layer 2. So, okay. Let's get on with this. Germany's economy is a warning. I've been very bearish on Germany for a while, but not without reason. Okay, I try to sum this up. They are captured by radical Marxist globalists. And when I type this out, I realize it's kind of wacky, okay? To say that the globalists are Marxists is wacky, but they are. They are. And there's different kind of characteristics in different countries. So Marxism did not, it's supposed to be at the end of capitalism is communism, okay, is Marxism. But Marxism took over in all of the uncapitalistic countries, all of the countries that were agrarian societies, that weren't capitalist societies. So the capitalist societies that were based off of the Western classical liberal tradition, they successfully resisted Marxism. Okay, but Marxism went away. It went to the agrarian societies where it didn't belong and it didn't fit the theory. Okay, and then it was transformed. Mao did a good job transforming it when he took over China, and it transformed in very small academic circles into cultural Marxism that we see today, and identity politics, and DEI, and all of these things, LGBTQ, and the radical identity politics there. That is Marxism. It is Marxism because the sign of Marxism. I saw a meme this morning on Twitter saying that everything is communism and people just label everything they don't understand or everything they don't like as communism. Well, in this case, this is how it breaks down. So Marxism is basically oppressor versus oppressed. And it's a zero-sum ideology, oppressor and oppressed. So anytime you see something like what black people can't be racist because it's the white oppressors, or women even. I mean, this is in feminism as well. So the patriarchy is the oppressor and women are the oppressed. Blacks are the oppressed and whites are the oppressor. That this is the oppressor oppressed dichotomy is the sign of Marxism. Now, instead of bourgeois versus the proletariat, it is now men versus women, blacks versus white. It has evolved from traditional Marxism into this new cultural Marxism. So these people are Marxist. They are Marxist. I guess you could even put it into the climate. So in a climate context, people are the oppressor and the earth is the oppressed. The earth is the oppressed. These are just ways to drive a wedge and get through policy. And they think they can make man. They think they can make a God man, where man is able to be perfected. It's just a matter of doing the work, doing the struggle sessions, doing the ideological work to peel away at your earthly, what would you call it, limitations, and realize that we can be gods on earth. And that is at the basis of what Marxism is. And all of these people, they're just Marxist globalists. So it sounds kind of kooky, but that's where I'm at. They have destroyed their energy infrastructure in Germany there. They are large exporters in an era of deglobalization, which I talk about, of course, a lot, and have horrible demographics. So that's all the reasons why I'm bearish on Germany. And also, I should have put in here as well that with the rise of populism, different geographic locations, different environmental circumstances will result in different types of populism. Okay. And you've seen that throughout the 20th century in Europe. You saw that back even in the 19th century, early 19th century, with France and their rise of populism. And so different places have different types of populism that arise. And Germany's type of populism is quite unique compared to other places. So not only do they have all these problems, but they have a unique brand of populism that will be resisted by their neighbors. This week, this chart crossed my feed of Germany's monthly trade balance. It has crossed zero. So it's gone negative on a trade balance. If you look this up, Germany's monthly trade balance has now gone into the negative 1 billion per month, from an export powerhouse to negative 1 billion. This is not good. The once great exporter is becoming a net importer. This is a warning of what is to come to exporters everywhere, aka China. As the international system grinds to a halt, global credit will come under pressure, and the only logical direction is toward recession or even depression for many export-led economies. China. Okay, that's it for macro headlines and Bitcoin headlines. We're going into price, but before we do that, let me check any comments. Got to get these comments, guys. Put your comments, please. I know I go on my tangents, but I love comments. I love interacting with you guys. So put your comments down below. Okay, 133 people watching. What's up, guys? Check out bitcoinmarkets.com. It's a free weekly newsletter that goes out, and then I read through it and discuss it, go on tangents and stuff. It's fun, and hopefully I get to interact with you guys if you drop your comments. If you're watching on Twitter, jump over to YouTube and Rumble, like, comment, subscribe over there. Trying to grow the YouTube to get it monetized, and it's an easier interface to chat. So there, you got that. Let's go back to the report now and go on to the price analysis. Like I said, I wrote this, usually it's Monday afternoon. I write it, publish it about 2, maybe 3 p.m. Eastern time, and then I do a live stream at 4 p.m. So it's real fresh information. This time it was put out yesterday, and went to anniversary dinner with my wife last night. So did not do a live stream, and just getting back to it this morning, hitting the ground running. And so a lot of this information is about 20 hours old. So we will look at the live price charts, but okay. Short price section this week. The next professional premium post this week will look at several fundamental indicators, on-chain and mining indicators, so we can time the next big move higher. Make sure you are subscribed. Last week, I said in the price section, over the next week, expect a battle with the moving averages to continue with no spike higher until breaking the 200-day. All right. Price is progressing almost perfectly with my predictions last week. So here was, at the time of writing, you see, we struggled with the 20-day moving average, then the 50-day moving average, and then we popped up over 200. We were unable to hold that. So let's go to the live price chart now. And we are falling even more as we speak. So you can see, once again, the 20-day moving average, fought with it for a while, broke that. We'll see. Okay, as we came into here, the cluster of moving averages acted as resistance for a multitude of reasons that I've covered in the past. But then we were able, once they started separating, that combined resistance weakened for each individual moving average. And so we were able to break through the 20, tested the 50-day for 3 days, then broke it above the 200-day on a big inflow on Friday into the ETFs. Then we had a very bland weekend, and we broke down below the 200-day. Now we're kind of testing this 50-day, but it's actually slightly below the 50-day right now. So we'll see where this ends up. I don't expect this to be any sort of major dip because we have those big inflows for the ETFs. We're in a cycle, 4-year cycle, that we're getting to a point where we need to make a decision, and we're likely going up in the next, over the next several weeks. And so I don't expect this dip to be significant at all, bouncing off of the 50-day. That is what I'm thinking. But right now we're at 61,900. Okay, back to the report. And let's just see what else I say. The price jump on Friday was likely due to a small surge in ETF demand. I showed you 250 million on Friday, 200 million yesterday. If today's candle closes above the 200-day moving average, that should be a significant sign of strength for the rest of the week. And let's go back to that and see if we did close. We did not close above the 200-day. So that's what I was saying yesterday. If we can close above the 200-day, that would be a sign of strength. If not, a sign of weakness. And we did close below the 200-day moving average. And so that was a sign of weakness. Okay, back to the report. Something has to happen soon for price to maintain the 4-year cycle pattern. We are now 4 months removed from the halving, and price historically is on its way higher by this point. So let's take a look at these cycles. You can see we have each halving in the vertical line, followed by a period of like consolidation and then a breakout. The halving number one doesn't quite fit this pattern because it was rapidly going higher. And so I just left that one off. But you can see it repeated here again, several months of consolidation on this monthly chart, and then we go higher. Now we have several months of consolidation after the halving and a window here to go higher. So we'll see where this goes from here, but we are kind of running out of time to fit some of these patterns. In the past, I remember maybe talking like back in this area when we were consolidating under 30,000. I was like, hey, we got to get moving if we want to keep on the cycle, if we want to keep going and reach some of these highs by this certain point, whatever a specific point, then we got to get moving. And sure enough, we had a massive monthly candle here and followed by several massive monthly candles moving into the new year. So we could repeat this pattern again with kind of the middle of the year being so-so, and then the last few months of the year being very big. So that is a possibility as well over here on this side. Okay. Supply of stablecoins has been outpacing the Bitcoin price for months. It is only a matter of time until the Bitcoin price responds. It's not going into altcoins for sure. Of course, altcoins have been they've been languishing very hard. And let's take a look at this. So Tether market cap, I was unable to find a total stablecoin market cap for USD stablecoins. If you guys know where that is on Telegram, on TradingView, please drop it down in the comments. I know I can do like Tether plus USDC plus whatever, but this is cleaner. I just want one metric that combines all of them. But here we go, is the Tether market cap, and you can see it's continuing to go higher, 117, almost 118 billion. And the price is languishing as just recently, if we zoom in, can we zoom in even more? Yes. Okay. So right here over the last month or so, the Tether supply has really increased. The rate of change of supply has increased while Bitcoin price has languished. So where is this going? This isn't going into trading altcoins, really. Altcoins are languishing hardcore. It's going to come into Bitcoin. It's going to be used in some schemes, whatever, with trading in Bitcoin. And we just don't see that reflected yet in the price. But yeah, there you go. That is the Tether supply. The heat map still shows the insane liquidity magnet up at the all-time high, just a hop, skip, and a jump to 72,000. So you see there's not much, there's some liquidity building below the price. There was liquidity kind of in this region that we just captured all of it in that Friday candle. Some little bit building above price, but there's not very much relative to this huge glowing amount of liquidations and liquidity up here at 72,000. Now remember, people like liquidity. If people are going to make moves, big purchases, they want liquidity because they don't want slippage. This means that there's going to be a lot of coins hitting the market. And so, this is going to be a place where there is a lot of liquidity and less slippage because there's going to be a lot of Bitcoins changing hands. So that's a magnet for price. Okay. Overall, we are not done battling the moving averages at the time of writing, but that could easily come this week. Time is running out for a Q3 rally and for the bull market pattern to repeat again. A sell-off in other macro markets is becoming more likely. Now, this is important. And it is important for Bitcoin to establish itself with a strong move prior to that, in my opinion. So I want Bitcoin to have a strong upward movement into these macro uncertainties, into perhaps the stock market rolling over in September or something like that. I want Bitcoin to move prior to that and show a difference between the stock market and Bitcoin. Of course, there's people out there, Stan Druckenmiller, Larry Fink. Who am I missing? Who's one of the other big guys? Paul Tudor Jones. They're saying Bitcoin is gold. Bitcoin is inflation and deflation hedge. It's a safe haven asset, and that is going to do well in times of panic. So there is important, I think, for Bitcoin to show its strength prior to any macro troubles starting. Overall, next week, expect to establish itself over the 200-day with multiple closes, and the likelihood of a spike higher has risen. We will be approaching the all-time high before you know it. Well, we did not hold the 200-day, so we'll have to retake the 200-day. And actually, right now, we're dropping below the 50-day. So we have to hold the 50-day first. Then we have to retake the 200-day, which all could happen within a matter of a couple hours. So it's not like it's a hard lift for Bitcoin to get back to being above the 200-day. But those are the steps that you need to accomplish before you start talking about when is the next spike higher. Okay. All right. So that was it for price. Let's go on to mining headlines. Thai authorities, so they're just doing the CBDC thing that we read about, but they are also raiding illegal Bitcoin mine after power outages. From this article, police and officials from the provincial electricity authorities raided the house in Ratchaburi town on Friday. Quote, we found Bitcoin mining rigs, pointing to people using this house to operate a mine and using power they didn't fully pay for, said this guy, the chief district security officer. No one was arrested during the raid, he added. It was the fourth time this year that authorities have raided an illegal mine in the Ratchaburi province. So very interesting. They're cracking down on Bitcoin mining, probably stealing energy, not necessarily the Bitcoin mine, but an illegal Bitcoin mine. I mean, I wouldn't want people mining off my electricity, right? So this does make sense. It's not like they're cracking down necessarily on Bitcoin mining, just the illegal Bitcoin mining where they are not fully paying for the energy that they're using. Okay, that's one story. Next story for mining. Bitcoin miner reserves halted sell-off. I've updated this chart the last 2 weeks to track the bottoming in sell-off from Bitcoin miners. It's not much yet, but the tide might have turned in the selling. The tide of selling might have turned. Okay, whatever. Bad sentence there. And you can see down here, last couple of weeks, we do have a slight increase in Bitcoin miner reserves. Some of this we kind of talked about, part of this being due to Marathon just buying Bitcoin. They bought 4,000 Bitcoins. But now that this is kind of a 2-week trend, that can't be explained, all of it. I can't explain all of it. So there you go. That's that. Hash rate difficulty. Hash rate has maintained its upward movement over the last week, extending the estimated gain in difficulty to 3.1% in one day. And we saw this now, it's down to 2%. And let's go to a live here. Okay, so see hash rate. This is a 7-day moving average. If we put the regular hash rate on here, you can see how volatile it is coming down here, pulling down this average, which is why we have a 2% instead of a 3%. But there you go. Okay, back to the report. Mempool. We experienced that brief interruption on the 22nd, which has since dissipated. The mempool is a nice 137 megabytes, and fees are back to normal. In comparison to previous mempool states, you can see on the chart, this disruption was minimal. So you can see back here, this is what I'm talking about, buildup for a week. A week buildup followed by a spike. Okay, this is a buildup, a constant buildup, which signals volatility approaching. It's a leading indicator of volatility. We did not have anything back there. And actually, you can't even see the spike on this chart compared to, like over here. Even though this didn't get as high in fees, didn't get to 500 back here. It got to like 200 maybe. Here it got to 500, but it was much, much smaller because it happened in 1 or 2 blocks. Okay, this was abnormal spike, not like a buildup like this. So just wanted to pound that dead horse a little bit. Okay, that is it for the mining sector. Let's move on to layer 2. But before I do that, let me check comments if there's anything coming in. All right, we got some DEX. I finally woke up earlier. Okay, what's up? Where you joining us from, Dex? Are you in the U.S. or what? Maybe you're on the West Coast, so yeah, that might be a little early. Happy anniversary. Thank you. Happy anniversary. Florida Bitcoin, what's going on? Neighbor? John Delaney asks, do you think the ETFs are going to change the game this cycle and break it? Ooh. Very, very good question. Now, while I talk about this, let's go to that long-term chart that I had. Scroll. No, this one. Okay. So will the ETFs change this cycle? Yes. They're strong hands. Most of those investors are going to buy and hold the ETFs for a long period of time. Now, there are trading strategies where people are buying in and then hedging with, say, futures. Okay. So there's a lot of different new trading strategies that are being implemented, but there's a lot of different layers of holding in the ETFs. You have the OTC desks. So that's not going to be, spot market dumping. It's OTC buying and selling. So that's one layer. The next layer is market makers. Those are large whales that facilitate the ETFs. And the ETFs representative is called authorized participant. So you have all of these different layers that can hold Bitcoin, and they don't have to necessarily hit the spot market. They don't even have to hit the OTC desk, really. And they can be absorbed. So the volatility, I think, is going to be much lower. And since there is such a big demand from all these institutional investors, I mean, right now we're cracking 18 billion. They're increasing right now again. I could easily see by the end of the year getting to 30 or 40. Once we hit the all-time high again, there is going to be a mad rush from people. And especially now that some people like Morgan Stanley and other big investment brokerages or investment firms can be pitching Bitcoin to their clients directly. Imagine them pitching this thing that has a 4-year cycle and it's breaking all-time highs. There's going to be a ton of demand coming in. So we could see a very rapid price movement, but I think overall the volatility is going to be lessened, and that's what we expect. What we've talked about a long time in Bitcoin is each cycle will be less volatile than the next cycle as we approach, as we build a deep liquidity base for Bitcoin and on its way to global domination. You have to build deep liquid markets. And that, I think this cycle is like the first where we're just really building out those deep liquid international markets. So what the underside or the behind the scenes of the Bitcoin market, what it's going to look like at the end of the cycle is going to be different than what it looked like at the beginning by a lot, because it's going to be deep pools of liquidity. And so that's why I would say that this is a very much a growing time for Bitcoin. Now, what does this mean for price? It could mean the moon. Okay. Some very smart people, Martin Shkreli, very smart guy, whatever you have to say about him negatively, he's a very smart guy. And he was calling, unironically, for $1 million per Bitcoin by the end of this year. And that was way earlier in the year, like maybe in March or April or something like that. I don't think it's going to get that high. Of course, there's all sorts of very, very cosmic predictions. But I do think a conservative run-of-the-mill cycle would be like between 200, 300,000. Now, is there a possibility that we are hitting a super cycle because of these ETFs? Yes, that is a higher possibility this time than last time. There's also a bunch of altcoins that are dying and a bunch of altcoiners that are waking up slowly and dumping their altcoins for Bitcoin. And we're talking 300 billion, maybe 500 billion of altcoins that could be leaked over to Bitcoin. Now, that market cap for all altcoins is extremely inflated. There's no way you can get that price for them on the open market because, price is set at the margin. As soon as someone starts dumping their altcoin, it rapidly drops 90%. And so really, if we're talking about like realistically, like let's say all altcoins were to die over the next year, out of the 500 billion on that side of the market, I don't know how much is real the market cap is for the altcoins, but let's say 500 billion, I could see at least 50 billion coming from altcoins into Bitcoin as people wise up and realize that Bitcoin maximalists were right all along and altcoins suck. So anyway, that's what I would say with this cycle. It's possible that it's a super cycle. If we are conservative and say it's going to be a typical cycle, we're looking at those price targets. But yeah, volatility will be lower. And that it just makes it more approachable for even more products to be built on it, for banks to hold it, for banks to use it in maybe repo. They can use it as collateral. And as things are less, as Bitcoin becomes less volatile because the markets get much more deep and liquid, then you can see that Bitcoin will just be used for a lot of different things. Now that demand will surely add demand to hold Bitcoin. And so you have even more rocket fuel. So that's what I would say, Delaney. It's not really a straightforward answer, I guess, but it gave me a chance to rant. So, all right. Let me see. Any other? Please expand on how algos operate to keep shitcoin prices in line with movements in Bitcoin. Ghost of Collymore. What's going on? Thanks for joining. Please expand on that. So there is, I'm not an expert. I don't run a trading bot. I've never run a trading bot, but you can run a trading bot to trade the spreads of things. Famously, this goes back decades, probably 100 years, where you have correlations in the market that people trade off of. So if one side of the correlation pumps in price, you buy the other side of that correlation, or you sell the other side of that inverse correlation. Okay, so those things happen all the time. And I just think of Ethereum and Bitcoin. So there's bots that are programmed to trade the spread. If Bitcoin goes up and Ethereum doesn't, it's programmed to buy Ethereum because of the historical correlation. And so these algo bots are keeping the two assets linked in that way because of the perceived correlation, the perceived connection, or the perceived relationship, where there really isn't. Okay, but they have correctly marketed Ethereum over the years as an affinity scam on Bitcoin to make Ethereum like, quote unquote, like Bitcoin. It's an alternative to Bitcoin. So then it's correlated. And Ethereum does not trade off its own fundamentals for the most part. You see it really clinging on to Bitcoin. When Germany was dumping the 50,000 Bitcoins, they were dumping 0 Ethereum, yet Ethereum fell more than Bitcoin did because it's less deep, less liquid market. The algos are trading and they will overshoot. So because Ethereum will move more than Bitcoin. So if Bitcoin moves 5%, Ethereum moves 6%. That's just how it is. And it is not based on Ethereum fundamentals. It's based off of Bitcoin fundamentals. So that's how I'd answer that. Okay. Oh, John Delaney, what a good question, man. You say that if volatility is lower, does that mean that the cycle must run longer on the way up? Wow. Oh, that is very possible, man. I never thought of it like that. Woo. Yes, I would say it does. It expands the, well, okay. Yes, because upward volatility would also be dampened because of the trading strategy. So when let's say somebody buys the ETF, they put on like say a straddle trade or some advanced hedge in the futures market. Okay, now those advanced trades in the futures market, they will limit upside potential. Actually, they'll limit volatility to the upside. So they won't, they can't direct price, like price will get to where it's going to go, but yes, they can slow it down. That's a very good observation, and man, I'm going to have to think about that one for a while. But yeah, I think you are right. I think if volatility is lower, that means price will move up slower and take longer. But how does that, so that would essentially mean the 4-year cycle is dead, off that simple observation. Ooh, boy, I'm not prepared to say you're right, but I think you're onto something very big there, John. So good observation. Okay, let's see. Let's go to Telegram, see if there's any comments here. Okay, we got some. Point. A couple people in the chat have posted update to German manufacturing export data and said that the chart you had used was from 2022. Oh, it was? Bro, let me go check that. I'm going to check the axes here. Let's see, 2020, 2021, 2020. Yeah, I guess it is. This is from 2022. What the? Okay. According to 2024 chart, Germany's exports largely recovered. I'll try to find an updated one. Okay, let's do this. I'm looking right now. Bring it over here so I can share it. Okay, let me make sure this is coming through. All right. What does this say? Oh, this is stable coins. Oh, that's not what I was looking for. I thought you were going to give me a link to the German thing. Okay, here we go. But this is, I can't show this individual image, I don't think, unless I tweet it. Let's do that. Let's just do that live, guys. We're going live here. So this is the monthly for the German exports. Yeah, look at that recovery. That is interesting. But this doesn't have a negative number on it, by the way. Yeah, largely recovered. This is trade balance monthly. Thank you for pointing that out. I will have to look into that more. Appreciate that. Setting the record straight there. Point. Okay. Okay, you were talking about the 168 billion for the combined. Okay, appreciate that. Another thing, this one corroborates the figure and overlays the total stablecoin market cap onto Bitcoin chart. Okay, let's copy this, put this in here, and share this. Yes, this is Crypto Quant, but this is the paid tier. You can't get access to this. 165 billion. Yeah, and look at that. Let me make sure I'm sharing this properly. Hold on. Okay, so look at that recent increase. This kind of bottom right here, can you see my cursor? Yeah, the bottom right here corresponds with this bottom, and then it's just been up, and Bitcoin has followed this. But overall, we never had any sort of real dip in the number of stablecoin dollars as Bitcoin has been going sideways. So yeah, that's a little bit more detailed chart. I like that. Thank you for sharing. All right. Where was I? Did I do layer 2 yet? There wasn't much on layer 2. Let's just go down here and finish up. So long issue today. So layer 2, miscellaneous. If there's some big news, I put it into layer 2. If there's something new about Lightning or something new about like BitVM or some layer 2 protocol, I'll talk about it. Here, I'm just kind of going into this altcoin staking. So I'm not going to write much about this. I did write about it in this post, but suffices to say, I just wanted to point out that creativity around Bitcoin layer 2s continues to improve. While I don't think this particular use case is promising, which is the staking, it pushes the boundaries of what people think can be done with Bitcoin. So here is just this representation that makes it smaller, actually. Representation of Babylon being restaked with all of these other coins. If you stake your Bitcoin into Babylon, then you can restake with all these other coins. So it's kind of a side chain in a way. Not in that proof of stake is not sidechain-esque like a peg, but you putting it into Babylon is kind of like a peg into some sort of sidechain or layer 2. But the bad thing about this is it just enables all these crap coins to rug pull you and stuff. So this is not the future, these things, but maybe Babylon into other side chains that are pegged to Bitcoin. So for instance, the Elements sidechain or Liquid, LBTC, is 1-to-1. So it's pegged 1-to-1. One liquid Bitcoin is one pegged Bitcoin. So they don't have a new unit. It would be like making the US dollar worth 1 sat. Okay. You don't have a new unit. 1 sat equals $1 or 1 cent or whatever you want to do. That would be like a government peg sidechain. Would be legal tender of backing by Bitcoin. Now, that is not what this is. This is Bitcoin staking, and then all of these guys are just inflating or pumping or dumping, whatever. So this is not legit. But if each one of these were, say, this one's Japan, this one's South Korea, this one's Taiwan, this one's Germany, this one's Spain, this one is England, right? So all of these are different side chains, and they're all pegged to a Bitcoin unit through, like, Babylon is like the bridge here. It's interesting, okay? That kind of stuff is interesting. And so there's a lot of creativity happening on Bitcoin layer 2s. That's much better than any other ecosystem, any other altcoin, any other stuff like that. All of the really creative stuff is happening on Bitcoin now. And I think it's interesting that they're pushing the boundaries, and they're going to find something great. But okay, that is it. In case you missed it, here's all the stuff you guys can check out that I wrote the last week. And yeah, there you go. Bitcoinandmarkets.com. Let me take one more look here at the chat. Okay. One more at Telegram. All right. Yeah, and you guys can see if I'm wrong about something, point it out. I will take that back. I will think about it more, and we will move forward together and trying to understand what's going on in not only Bitcoin, but how does Bitcoin become monetized? How does Bitcoin become the next thing in the world? It doesn't have to be. Like, somebody was asking me, or we stumbled across this in one of my tangents the other week, was, what's one of the worst things for Bitcoin? And it would be if the economy actually grew, if the economy was doing well, if the global financial system was not breaking down. Okay, that would be bad for Bitcoin, because there's no reason to search for an alternative if what you have is functioning properly. The fact that the international system, which is credit-based and it is deteriorating, which is deflationary, that is what's pushing people into something like Bitcoin. And to understand how all of these things work, understand what things are going on around us and what it means for our future, our family's future, all of that. It's very important, and we are on this journey together. So I appreciate being pointed out when I'm wrong. And yeah, so Good times. One last scan at the comments, and then we'll bounce out of here for today. So that's it, guys. Thanks for joining me. My name is Anson Linder. This is Bitcoin and Markets. Check out bitcoinandmarkets.com. Like, comment, subscribe wherever you are watching this, listening to this. Appreciate that. Share. Get this content out to other people. Help the show grow. Appreciate y'all. See you on the next one. Bye.